Hello, everyone, and welcome back to Seed to Harvest. Today, I have a very special guest on. This is my co-founder behind Genius Ventures, Josh Schlisserman. He's also the chief of staff at Series Financial, a Forbes 30 under 30 venture capital standout. And he lives in LA and grew up in New Jersey. He told me not to give him an intro like that, but I'm going to do it anyways. But I'm super excited to have Josh on to walk through our learnings of raising a venture fund at quite a young age. I was 22 and Josh was 24 when we started. So contrary to a recent tweet that said, if you are 23 and work in VC, you have a fake job, we definitely had a very real job. So Josh, with that, let's talk about how we originally met on the internet.
So it was in October or November of 2021. And
No,
one of,
2020.
was it 2020? Oh my God.
Yeah,
Wow.
dude.
Yeah, that's right. Wow. Almost 2 years. So basically, one of our mutual Twitter friends,
Go, Paul.
Paul, go Paul, basically reached out to me because I was planning on raising a fund at the behest of Arjun Sethi and Samika. Paul was like, hey, there's this girl named Paige, and she seems to be going through a similar stage to you, and maybe you two could end up raising a fund together. And I was like, well, I don't know about that, but I'd love to connect with her. It seems like she's angel investing, and it'd be cool to like network with someone else who's forming syndicates and doing syndicates while they're young and building a track record. And so we got like connected, and it was like an immediate just friendship just struck up, just like geeking out about the business of venture and like ways to like scale our syndicates and scale our angel investing and like the deals we were looking at and like what interested us. And from there we started doing like biweekly calls, and then biweekly calls kind of just became like daily
I would
text and
literally
daily
like FaceTime
text.
you and be like, "Do you wanna hear some crazy stuff that I saw in the early stage market?" And you're like, "Yeah, I need the tea."
We really bonded over the gossip for sure. The gossip. No, but it was one of those things where like definitely an instant connection and just like very like-minded. And like around December or January, it kind of just became clear that we should partner up.
I wanna dig deeper into this. So, as we were going through this process and getting to know each other better, it was kind of in the back of both of our minds around, like, what a partnership might look like in the future. So, I was reading through my old journals, and we actually in, like, the second big outbreak of COVID, we were like, "Okay, we need to meet in person and, like, hash this out." So we drove, like, Josh lives in LA, I live in San Diego, so we drove halfway to Laguna, and we sat outside the Montage, like, 6 feet apart outside wearing masks with, like, our little notebooks. It's like, do you remember what the questions were that we talked through? I have, like, some of my notes here, but I'm curious to hear kind of, like, what were the questions in your mind that you were going through as kind of you were evaluating bringing on a partner? Me.
Yeah, it was interesting. Well, first of all, I think we used that photo in our memo, which was really funny. The memo that we sent out to LPs, where I also look like a ball. But no, I remember that meeting like very vividly. We met in Laguna and we sat there for a few hours, I think.
Yeah.
And the first thing we were focused on was like, what does a thesis look like if we work together? And I think we came together on that pretty quickly, what that would look like, which it ended up changing a little bit as we started deploying
Yeah.
the fund and realizing like we could get into that, but we started realizing what we liked.
It's interesting. I think there's a distinct shift that goes from you pursuing your own individual, like, investing interests on angel investing versus managing other people's money because there's no one, like, double checking the decisions. Like, it's all us, and we're, like, sticking our necks out on the line and saying, like, "These are the founders and teams that we have conviction in," which is much different than, like, if you're investing your capital, you're not necessarily defending it to anyone, and then in a syndicate those people are kind of opting in or out of those deals, and so at the end of the day, it's not really your decision, but for a fund, it very much is. So I think the development of the thesis early on was a really great early framework. And then, yeah, what were the other things that we talked through?
Well, just to add on one point to that, I think we also like realized other than managing other people's money and how that frames our investment
Mhm.
decisions, for us, we realized the product we were selling to LPs was very different from the product we were selling to founders.
Yeah.
And we were like, let's like align the two. So that was an interesting discovery at the very beginning of our investing journeys together.
Yeah.
In terms of other things at Laguna Beach that we talked about, it was little things that were big, like such as like who gets paid what. At the time, you were going to be part-time while working at WorkOS, and I was going to be full-time working on the fund, which ended up flip-flopping, which I'm sure we'll get into and why that happened. But yeah, so there was that. And then there was the like even hiring in the future, not even for this fund, but like what does it look like?
Yeah, like long term, 10 years in the future. I think that's one of the things that's a common misconception is if you can't really like dabble in building a venture fund. Like you're building one and then you have a fiduciary responsibility to your investors for the next 10 plus years. Like it's not something you can go lightly into. So I think it was really important to have those conversations early on and make sure that we were aligned on values and like how we were gonna treat each other if we were having a tough conversation and things like that. It's definitely like no absence of difficult conversations. But I guess like to set the stage for how things were back in that time frame. So I think we had gone home from Laguna and I don't know, did we say we were going to work together when we were in Laguna or did we're like, let's give it a couple days where we can like, I think it was over Christmas, right? We're like, we'll think about it over Christmas.
Basically, in Laguna, we're like, okay, we're pretty aligned. We have things that we agree on. There's very few things we disagree on, but the things that we disagree on, we can figure out, like portfolio construction and checks, number of checks, etc. Let's round up after the new year to see if we're still as excited about investing with each other as we were before the end of the year. We hopped on a Zoom call pretty shortly after the new year, and we were like, let's send it, let's do it.
We're like, all right, we're going to do this thing. Tell me more, because you had way more interfacing with the legal and like the fund administration side of things on the earlier side. And we'll talk about this a bit as like our responsibilities shifted as the fund went on, especially when I ended up going on full time. But what was that like?
Yeah. So the fortunate thing was like having worked at like a VC firm from the ground up prior to
Oh, yeah.
this, I was like able to know what the process looked like, but I still made like a ton of mistakes and like we still ended up spending more on like legal than I would have hoped. But I will say like we also avoided a lot of mistakes. And I think a lot of what I did early on when like forming the fund and even choosing a fund administrator and like interfacing with them was ask a lot of questions, which I think sometimes emerging fund managers are afraid to do because there's like this notion that
You should
you
know
should
what you're
know
doing.
doing.
Yeah.
Yeah. And it's like that's not true. Like the amount of emerging fund managers that, especially on the back office side, that absolutely have no idea what they're doing. They need help. There needs to be more education, resources, guides. That was actually originally the reason why I wanted to partner with you was like just the education that you provided to your community. And I think for me personally, there was a steep learning curve for sure.
Yeah.
And
Yeah.
I wasn't afraid to admit what I didn't know. And I think fortunately we were both able to have resources around us where we were able to be supported and guided. And I will say like most emerging fund managers don't have those like resources. And that's like a huge fault in our ecosystem for sure.
Yeah, definitely. Let's talk about how long is an LPA?
It's very long. And I know you want to know what makes it even longer when you have to make amendments to it.
Mm-hmm.
Don't we know?
I have this note. It was kind of like some of our learnings, and we can dig in this more because I want to focus on fundraising next. But it was like we learned these lessons in excruciating detail. So, like, one of them was like you can't turn off the fundraising lever once you turn it on. So this takes away a lot of the mystique, which we can talk about in a bit. The second one, I was like, read your docs. Our LPA was off by 4 letters and 1 word in our agreement, and it cost us $5,000 in legal bills, having to message 90 something of our investors to get them to sign a DocuSign saying that it was okay, we were going to change it, and almost our salary for a year. So to all those emerging fund managers out there, read your LPI, which is a limited partner agreement. Basically what you sign and your investors sign in a venture fund that details how you're going to operate, different like legal aspects of it. But I thought that was funny. It can be off by
Yeah,
a little bit and
it can ruin
make
everything. Read that LPA, redline it, Don't
Yeah.
skip over every little detail matters. Even like, like warehouse provisions and like all these other little things that like don't come in the standard term sheet. Like you have to ask for it. Like legal counsel's not
Yeah.
going to give it to you.
Yeah, it was super interesting. Like now it's like, okay, when I receive legal docs, I'm like going through and I have to write a plain text summary. And if there's anything that I like don't understand of the plain text summary, you go to your legal counsel and be like, can you confirm that this means this?
And it'll save you,
It's way less expensive to do that. Yeah.
yeah, it'll save you money and time by like just, again, I think the theme here is like ask questions. I think like that's ultimately like why we got into venture too, is curiosity, right?
Yeah.
So, yeah.
Okay, so I want to talk about what did it feel like getting your first commitment? I'll share my story, but what did it feel like getting your first commitment for the fund?
Well, so there was that time period in October where I literally started the fund. I started
Mhm.
fundraising, and and I remember the first commitment I got. I think was Samit actually.
Yeah, shout outs to me.
Samit basically, was
Oh,
like
Samit Gajri is the ex-CSO of Carta and now runs his own venture fund and is CSO at Instabase now.
awesome, and he was a huge supporter. And I think Arjun was a fast follow
Mm.
pretty much after that, but they were the ones who encouraged me to go manage a venture fund. I remember when Samit said it and was like, "You should go do this." I was like, "Dude, you're crazy."
That's like also something that I think is like really important is just having people early on that tell you that you can do it.
Yeah,
Because yeah, just having someone be like, yeah, you can run a venture fund was such a massive, like people started like asking me about it when I was like tweeting so much about venture. And I was like, I thought this is in my 10-year plan, you know?
I feel like for you, the person who really like you had a few commitments beforehand, but the person who really like let you know that you could do it and that you were able to do it was Andy Wiseman from USB.
Yeah.
I feel like
Yeah.
I remember that very specifically, like you calling me and being, I can't believe it, Andy's coming in. I remember that being a huge, huge deal for you.
Yeah. I remember well, I was reading it to you before we started recording, but I was super excited to have Andy Wiseman from USB on board for the fund. So excited I refreshed like our CRM like 50 million times today to see what he would reply about check size. And I like went on to talk about like different aspects of our conversation, like being impressed by my passion for like the craft of investing and asking about like how I learn. And then also he talked about writing like investment memos and how like venture is not about finding good businesses, but it's about spectacular ones. I think like one of the best things that he told me was like the investment process, just that it's process. And that even like 2 decades in, he's still learning things and like adapting to the markets. And I think that was really powerful to have someone who I had looked up to and respected for a long time. Be like, it's a learning process. You're not gonna get everything right the first time and probably not gonna get everything right the 20th time, and it's an industry that involves a high amount of luck as well.
For sure, for sure. No,
Yeah.
I think his advice was, when you were relaying it to me, I remember sitting there and being like, this makes a lot of sense. Like,
This guy knows what he's talking about.
this guy knows what he's talking about. It's refreshing to hear, to be honest, because especially in the beginning, like when the yeses started rolling in, especially towards the end of the fund, it was kind of like, okay. But at the beginning of the fund, there was that period where it was just like, oh my God, are we going to even be able to do this? Should we lower the fund
Yeah.
size target?
Oh
And
my gosh,
so that was
we
why.
were stressed. I think it's like so we had set a target of 5 million and that's what we ended up raising. But I think that there were definitely bumps along the road where we were going through periods like I was joking with Josh about it being like the trough of disillusionment where you're like, can we actually do this? I think we were sitting at like 2.5 million for like a couple months of fundraising. And it's like no one was committing. We were like asking all of our investors for other intros. They were like, sorry, don't know anyone, or like we've already talked to them. And we were just like, is this the end? Like, do we just stop here? And I think we honestly like both just went on vacation for a bit and we're like, it's gonna be fine. We're gonna come, it's gonna be fine. It's just gonna take a bit longer. But I want to ask you, like, how are you feeling the night of our first close? So we closed on April 1st, 2021. And for context, for those of you listening, first close is basically when you're in business as a venture fund. And it basically means that you close on the different commitments that you've had so far, and then you can start investing off of those commitments. So how were you feeling the night of first close?
So I'll say what I was feeling the night of, which is very different to what I feel now, know what I know now. But it's like the night of, I was like super stoked. I'm like, oh my God, it's actually happening. Like, we're actually gonna do this. Like, we're actually investing. You at that point as well, it had been decided you were gonna go full time in the fund.
Yeah.
I had just started at series and I was full time on series, part time on the fund. And I think for me, I was just excited. I was like, oh my God, this is going to actually happen. He's just going to finally get to live out the investing dream. I'm going to get to operate and invest. It's like the best of both worlds. I think we're both getting what we wanted out of this. Knowing what I know now, I was a little bit, I would say, naive in that I wish we would have closed more money. I wish we would have
On
closed more
first
money
close.
on
Yeah.
first close because it
Yeah.
really helps move the needle for further closes. And also, that period of disillusionment, I think, was so tough on us because it was like a 4-month period where we only raised like 800K and
Yeah, we were like
the
halfway
1.6 million,
through.
yeah, the 1.6 million came from like our personal network, really, from
It was
us
like all the warm
networking.
intros we had.
Yeah,
Everything
and
else
then
after that was cold.
yeah, and then it was like we had to like for the rest of the fund really do a ton of networking on top of investing, on top of a bunch of back office administration. It was a lot. It was way
Yeah,
too much for just two people, one full-time person and one part-time person.
it
And
was
so
nuts.
it was way too nuts. And so I wish we would have closed more. And I think like that's a lesson learned. You want to close as much as you possibly can on first close to make the rest of it just from even an emotional and mental standpoint, like easier on you.
Yeah, no regrets. What would you like recommend as a fraction to close
Yeah.
on first
I,
close?
I think like the bare minimum, knowing what I know now, is you should close at least 40% of the do at least 40% on first close. The ideal amount that you do on first close is above 50%.
Yeah.
And that would be like
You have confidence
just
you're
to
gonna
go on
get
what
there
I
at that
know.
point.
Yeah, you have confidence, you have momentum, you're able to start investing. You can really split time between investing and fundraising and not focus as much on fundraising.
Yeah.
It can come much more passively and casually. And I think the problem is like if you close less than that, you end up spending more time on fundraising than actually investing. But you close this money and you have to start deploying it. And
Yeah.
that's like a conflict of interest.
Yeah, it's really interesting because it's very much like a two-sided sales cycle essentially that you go through because you're pitching to LPs about this product. And fundraising is such an interesting period of self-discovery because I remember like half of, we talk to so many people and we have 120 incredible investors, which I feel so lucky to have like that large of a community that supports us. But I think it was like you're having 500 plus conversations with people and they're like, why are you special? Why are you going to win? Which when you're like at any age, but especially just coming out of college, I think for me, it was a big period of like, who am I? Why am I special? And I think that like fundraising in any capacity has the ability to really like challenge your sense of identity and sharpen it because you have to answer that question like 500 times and then people get behind that story or narrative and their belief in your ability to execute on it.
Well, that's why I'd say the most formative conversation that I think we had in our fundraising period was
Mhm.
with Kanye
Con
from Screen Door, and called us out for like being like, "Don't worry about your age." Like,
Yeah, to put this in context, before every pitch that we would start out with, I'd be like, "I'm 22 and I'm raising a venture fund," you know? Before that, no one had really, like, called us out on it, and then Kanye was like, "Yo, you guys need to figure out what makes you special beyond you being young, because 'cause you're not gonna be young forever, and it's also not that defensible. Like, you're not gonna be 22, 24 forever, and if you wanna be in this industry for a long time, that's not gonna be the defining fact that carries you through, like, multiple cycles of institutional investors, like, figure out what makes you all special and, like, your perspective, and that was just, like such hard feedback to hear, but
It was very
just
disappointing at the time, but it out of all the passes that
yeah,
we had, and there were a lot, I think that was the best one because there was,
yeah.
like, actionable feedback that we could work on, and I think one of the things that was, like, during the period of disillusionment, and
That's so
we
brutal.
were
It was like a very significant check, and we were like, "We got this. It's gonna
well,
happen.
we
We're such a good fit." And
well,
then
I think what happened was we refined the pitch, and
yeah,
once we refined the pitch, like, actually, it was, like, within a
that's kind of
month
what
of us refining the pitch, like,
yeah.
we started closing like crazy, and it just all unraveled after that.
I so appreciate that feedback, even if it was really hard to hear at the time. Also, it's so funny that you were so stoked. I actually kind of had a low grade panic attack on the night of our first close. I think I remember calling you. It was either that week or that night. And I remember calling you and I was like, oh my gosh, Josh, we're managing like 1.6 million of other people's money. What happens if it goes to zero? Thinking through like all the worst case scenarios. And I remember you just being like, Paige, what if it all goes right? What if it like goes insanely well? And I think that was kind of a period where I think some other fund managers can probably relate to this, but you just, like, switch from being so emotionally tied to, like, dollar amounts to, like then you start to bringing on partners and, like, the check sizes start to become less relevant, and I think that that was one of the biggest switches, especially and it was helpful to go through that before we went through the trough of disillusionment because I was like, "Okay, I'm not necessarily emotionally connected to outcomes as strong as I was before." Yeah. But okay, let's talk about how our investing strategy shifted and some of our learnings from Fund 1.
Wow, it's interesting. Yeah, at the beginning of the fund, so we even like did discovery checks at the beginning of the fund, like these
Yeah.
10K checks into companies to form our investment process. And
Wait, let's talk
first thing
about
we
why we
inter-
did that.
well, I think it's obvious just because we hadn't invested together. We were like, how do we invest together? Like, who makes the decisions? And it was like, at the end of the day, what we ended up deciding, for everybody who's listening to this is that we decided, and this did change towards the end of the fund a little bit, but we decided to invest together, which was like, we needed both of us to say yes. And if someone said no, the other person had to make a convincing argument to the other person.
Yeah. Like a Socratic discussion for like 3 plus hours on some of the ones that were like
Like
more
get very deep, very,
yeah.
very deep, and sometimes heated.
Yeah. I
And
always really enjoyed those conversations.
those were fun for sure. And I think it was good gut checks, especially because like we had only written, a handful of angel checks and done a handful of syndicates. And like we were still figuring out what does a good deal really look like. And that's why the discovery checks were great because it didn't really affect portfolio construction, but it allowed us to figure out what our sweet spot was. And I think like one of those discovery checks we ended up doing a follow-on investment into with a core check. And that was actually the last discovery check that we wrote. And I think it's actually what helped form the core checks the rest of the because it was a company we both spoke to and actually had one of those heated debates because at the time, like, not that I had passed, I was like, I had passed knowing them months ago. Like, this is where you
Yeah.
invest in lines, not dots. And so it turned out like they just raised the Series A, so it turned out really well. But I think, a few things that changed is one, like going back to the way we make investment decisions. Now we're comfortable leaning on the other person, where if the other person wants to be like, look, I'm gonna invest, we just go, okay, we trust the other person's opinion, especially if it's in their
Yeah.
area of expertise. Like
And I
dead
think also
tools are
like building a higher sense of conviction in our own investing theses. Like, I think that that can be a challenging thing as you're starting out investing. You're like going through that period of self discovery of like portfolio construction and investment thesis really dictate your operating model, whether you're an angel or a syndicate lead or managing a fund. And I think that earlier on, we had a rough outline, but I think you really I remember Kanye actually wrote about this. He was like, I think you need to like find your magic in the market and like really hone in on it as you're investing and like reflect on the decisions that you're making. And I think that's really what Fund One has been about. A lot of it.
yes. So there's that. That's one thing. Even the way we, I'd say support portfolio companies. Like at the
Mhm.
beginning, I was like check-ins like monthly. And now it's like we're just texting with them and forming like really like actually informal relationships with them. And that's the way we keep tabs. And honestly, I think founders appreciate that more. And like, I think like one of my favorite stories from the fund is there's this company in our fund that, in terms of traction and revenue wise was doing amazing. And they went out to raise a series A and kind of all the investors from the seed round left them out to dry, but us. And
So
we
like to
like
put
went
it
to
in
bat.
perspective, we were like quite a small check in their like previous
Yeah.
rounds.
We like literally went to bat for this fund and we helped them find a lead. And my favorite moment was I had such an informal relationship with the founder and we would text so much, but I remember he called me at like 3 o'clock in the morning before the meeting with the lead investor that he wanted to lead the round, his series A. And he was like having a full blown panic attack. And we kind of just chatted him through it and, he calmed him down and he ended up absolutely crushing that meeting. And the investor came in later that day and gave him a term sheet. But for me and Paige, it was like one of those things where forming the informal relationship, like if we hadn't done that with that founder, that would have never happened. Like that phone call, that moment that I could share the joy of him raising a series A with him. I think that's probably the best part of venture is like when the founders not only like have conviction in the idea that they're doing, but like the belief in themselves that they can do it. And
Yeah,
that's like my favorite moment. That's one of my favorite moments from the fund.
I love that. I just got chills when you were talking about it. I think that's been one of my most rewarding. Like I think about this a lot. It's like when do I feel most alive? And I think for me, one of the things that's been so exciting is to see companies that have either gone through pivots or just like had a really tough time earlier on hit their stride and like grow and from, 1 to 4 person team to like managing a massive team. One of my favorite examples is working with Palette. When I led a syndicate, it was my first syndicate. Josh like helped me with all the logistics. I had no idea what I was doing. In their pre-seed, they're called Cardea. And when I met Kai, it was like 4 person team. And now I think they're like 12 or 14 and have an office in New York. And I got to go visit. It's just like really rewarding to see the team members that are so stoked to be working on the company and that the hypothesis that they pitched when it was like a Figma mockup is like working and in market and driving value for creators. I think that seeing that company growth has been such a intangible and incredible reward of this job beyond like markups and whatever. It's just like seeing the growth of both the people and the companies.
No, 100%. I mean, Pallets has been a fun company to watch. And honestly, there have been countless stories like that. I mean, there was even one literally a month ago where like we thought the company was like done. Actually, we were like, oh my God, even though they have this crazy traction, they can't raise because the market went to, buttocks. But, you know, all of a sudden they ended up getting her seed round led by one of the, I would say, like premier firms in the ecosystem. And like absolutely insane. And like just even the confidence she had after that was just like so much fun to witness.
I'm just like, we're so stoked for you. It's definitely like a difficult market, so it must have been challenging, whatever. And she writes back and she's like, nah, we were like oversubscribed. We had to turn away investor interest. I was like, let's go.
That was an awesome moment. And it was like,
I
even
love
at
that.
her, one of my favorite moments with her, that was one of the quickest yeses we actually ever gave. And like, there were a lot of people who passed. I remember I called you after 20 minutes in the meeting where I was like, oh, we're totally investing.
I think you were still like on the Zoom. You were still on the Zoom and you were texting me and you were like, I just met this incredible founder. Like, she will literally like run through walls to build this company. And I think that that's been a big through line of our investing is I think this is kind of like an Easter egg on our website, but it says like no lead needed. Like we build our own conviction. And I think that that's been a really rewarding part is like finding founders who we really resonate with that have found a lot of like no's and then taking bets on them when they might not have a lead involved and like kind of rallying our big community of investors to get them connected. That's been really cool to see.
Yeah, she's one of the best examples of that because she had a bunch of people pass on her because originally the price that she listed at it was too high. And then literally when she put down the price, everybody wanted to come in And she was like, no, no, no. And we wanted to come in. We didn't care what the price was. So she allowed us to come in.
Yeah.
I think one of the lessons from that is even like, if you have high conviction in a founder, yes, be price sensitive, but only to a certain point. And
Yeah.
it wasn't like there was that big of a jump between the valuation that she went out to market with and the one we ended up investing at. You know what? She had a ton of no's, and like there was no reason for people to be passing on her, to be honest with you, in my opinion. And so I'm really happy for her.
Yeah. Me too. So what is next for us, Josh?
It was December of this year. It was shortly before my birthday, I think, actually. And Paige came up to LA. We were doing another in-person meeting. You know, we had been doing them like bi-monthly or even monthly and mixing between San Diego and LA. And Paige came up, and this was a particularly stressful time. Can't go into too much details, but series was like taking off. And basically my time has been spread more thin than usual because I've had increased responsibilities and priorities. And I've really enjoyed my time working at series so much that I kind of found my dream job without even knowing it, which I never would have like expected or thought. December came around, and Paige and I had been talking for months after our final close about what does Fund 2 look like. We kind of came to the conclusion that Fund 2 was going to be done separately between the two of us. And the reasoning is just two reasons, to be very simple. One, we just have different long-term visions for the fund. Mine kind of changed based off my experience at series and fundraising. That's not anything to do with Paige or I. It's just like interest change.
Well, yeah, because I think you're just such an incredible operator investor, and I think that your operating brings so much context and value to the companies that you work with, and that wasn't something that was something that you were really excited to continue, whereas I was like, all right, I want to be totally full time on the fund and like build a big institutional firm. And I feel like that was just like a difficult balance to walk because it was non-negotiable for both of us.
I think it was like one of those things that the December conversation clarity of that. I think the second thing was like, you know, we invest in the future of work and play at BGV. And I've really enjoyed doing that. But where my interests now lie, again, due to my experience at Series, is in picks and shovel companies, specifically around crypto and fintech infrastructure. I was actually going to be done investing, just going to angel invest. But again, a few people approached me. And so I am doing a separate fund called Picks and Shovels, actually. And, you know, we'll be deploying from it, but, you know, at pre-seed and seed stage. But, you know, again, different thesis from BGV. And I think also the way I want to grow the firm is different from the way Paige wants to grow the firm. And honestly, neither of us are wrong. And I think it fits our like Picks and Shovels, like my strategy for Picks and Shovels fits me personally as an investor,
Yeah.
and the strategy that Paige has for BGV and the way she wants to grow BGV fits Paige's strategy as an investor. And I think the one thing that I'm really grateful for is a majority of our LPs were really, really supportive when they heard that we decided to split ways, and thought, you know, one, the way that it was handled for the most part was handled very well. And two was, you know, that it was amicable. And I
Mhm.
think that's
As you can see.
what we've been stressing. As you can see, we're, you know,
We're
I
wearing
think
our
one thing,
matching sweatshirts.
of course. But no, I think like the one thing that like for me that I get to take away, regardless of companies that get huge, founders that we get to work with, the potential monetary returns that we see, like for me, I've made a lifelong friend, and there's no price that we can put on that. And what I get out of this fun one more than anything.
Yeah, I think it was just like such an incredible period to grow up together. I really feel like I like grew up in venture with you. Like we got to go through this incredible self-discovery journey, and I'm excited to like continue collaborating with you in the future. We'll be working together for the next 10 years minimum on like returning the cash from Fund 1. Which is so fun. It's an excuse to get to talk to you.
It's not like you're not gonna FaceTime me randomly on a Tuesday to be like, hey, by the way, do you think this would be like a good tweet?
I get in my like coffee manic state and then I'm like, yo, like, do you think what was the most recent one that I sent you?
I don't know, but it was
Did I end
freaking
up tweeting it?
hilarious. It was so funny.
funny is, like, I didn't think I was a funny person until I met Josh, and then he just started laughing at all my jokes.
I think I just laugh easily. I think that's the thing. As negative as I am, I'm also a really happy-go-lucky guy.
I wouldn't say
Like,
you're negative. I feel like you're, like, cautiously optimistic.
there we go. I like to say
Yeah.
pragmatic. So one of my friends, his nickname is Mr. Positive Vibes, and there's like a picture of me looking angry because they used to call me Mr. Negative Vibes, and there's a picture of me being like super like, and there's a picture of him being like side by side.
It was like a running joke of us working together. Is like I feel like our like dynamic plays really well off of each other.
I feel like it kind of flipped too, whereas like, at the beginning, like I was like good cop and you were kind of bad cop. You're now kind of good cop and I'm now kind of bad.
Yeah, it was just like about growing into like our different roles and responsibilities. And I think in the beginning I felt honestly like, a bit insecure with like my understanding of fund administration, back office stuff. And I feel like you were just like light years me based on your previous experience. And then as I gained more like confidence that I was like, oh, okay, cool. Like I like understand this more. And so that was definitely helpful. I think that like it's something that every fund manager goes through of like having a bit of like, huh, I need to like figure all this stuff out. And there's like no class in school that teaches you
Yeah,
anything about it.
which is crazy to me. The one day, like some university just needs to like have a venture 101. Like I'm just blown away that like
Dude, I teach one actually at
I, I,
SCC.
I know you I know you do, but it's like it blows me away that it's not like a thing at all schools that people can opt into and learn
Yeah.
about. Because I feel like mo a bunch of people who go to school, specifically like in STEM majors, like their goal is to either go work for a corporation or a startup or, potentially found their own startup. And it's like there's no education on like even how to negotiate stock options, what the different types of stock options there are. What does investing look like? Why do people invest? How do they invest? Where does money come from? Like all these questions that like we kind of just had to learn on our own while doing it.
Yeah, it's crazy. Well, I know we're at time. This has been such an incredible conversation. I'm so happy that we got to have it. And hopefully you all enjoyed listening to it. I would definitely love to hear either if you're a fund manager and you resonate with what it felt like, or if you're getting started in your career and you've also gone through that like challenge of self-discovery and learning more about yourself and building great friendships along the way. Feel free to tweet at me, Paige Finn with 3 N's, or Josh. Josh, can you spell your Twitter, please?
Jay Slishy, JSLISHI.
Thanks so much for tuning in today to Seed to Harvest. If you enjoyed this episode, be sure to subscribe wherever your favorite podcast listening platform is. I'll be releasing new episodes weekly, and if you have any questions or comments, feel free to let me know on Twitter. That's Paige Finn, Paige and then Finn with 3 N's. Thanks, and see you again next week.